This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
Hi, this is Joe Rabil. Welcome back to the channel. What I'm going to do today is get a lot of questions about taking profits and exits. And so I'm going to give you two examples, one long trade and one short trade that I would consider to be, swing trading, which is different than the approach that I use for trend trading. For those of you who have taken my course, you know that I have a systematic approach that essentially follows Mark Douglas's mindset, which is pay yourself as the market makes money available to you. And it's a systematic way to not get so wrapped up in every nook and cranny of the market makes, every single tick, everything like that. But when it comes to swing trading, I think you have to be a little bit more active. So I want to give you a strategy that I think is a very professional way to take profits in a short-term trade. All right, I'm going to go through this right now. Just before I get going, if you want to learn some more about these techniques, I would suggest starting with the book. I'm offering at a discount right now. You can go to rabilstockresearch.com/book. Okay, so as I've said recently, I do like the XLs, the major sector indexes for swing trading. You don't have to worry about earnings with them. They provide enough movement, and remember, you can maintain. So the size of the bars is how you're going to manage the risk, correct? So the size of your targets are going to be relative to the size of your bar. So don't worry about whether there's enough volatility in them. There's plenty of movement in these indexes. And what I like most about them, if you're swing trading, you're looking at 11 different symbols. All right. You're not looking at thousands or hundreds or anything like that. Now, the people that take my that are subscribers to my monthly service, they can use the predefined list that I'm sending out, which I'm going through thousands of charts to come up with ideas. And they can use those because those are kind of already have momentum behind them and stuff like that. But if you want to save yourself time and you want to only swing trade, this is not a bad strategy. So I'm just going to give you a couple examples, one on the short side and one on the long side that are both XLs. All right. So let's look at this specific setup in XLK. The one thing I wanted to point out here is the decline that took place here. So this is what we're going to try and capture, and I'm going to show you why it was a pretty decent trade and the reasons behind that, and then also how to capture and how to exit this trade in a way that I think is systematic enough, but you're also sort of taking advantage of expansion. You don't necessarily want to trend trade if you're swing trade. So if you, in other words, trail a stop. If you're swing trading, you want to be looking to take targets and take profits as prices move in your favor. You don't necessarily want to trail a stop, all right? Meaning I'm going to keep trailing until I get stopped out. That's not how I would suggest doing that. I would look to take expansion bars, gaps, stuff like that, and take profits. But I'm going to give you another strategy that will allow you to sort of trend, to capture the trend until it reverses. All right, I'm going to show you how I would go about doing that. So let's just look at and evaluate what took place on this trade. First of all, I want to point out we had this massive red bar show up here. Now, keep in mind, while this was taking place, the green DI on the weekly, I'm not going to go into the weekly right now, but the green DI on the weekly had dropped down under 25 for the first time in quite some time. All right, we started to see a little bit of a loss in a relative performance in the XLK as well. So we get this big red bar to show up. Now, look at what followed. We had the little consolidation. In fact, it formed a little bit of like a pinch, and then it tried to go down and it couldn't take out the low of this bar. But then look at what happened. We get this big green bar that actually covers the midpoint of this bar right here. And it looks like it's starting to turn back up to the upside. It almost looks like a zero line reversal with low ADX. But what happens is we get this big green bar, and then the next day you gap down below the midpoint of this bar. You never took out the high of this bar. So do you see how we were trying to recover and turn things around from this big red bar, but we weren't able to do it? And then this starts to show a lot of weakness, and we get another pinch to the downside. So now we have a downside pinch below a declining 18. We know there's weakness on the higher time frame green DI for the first time in a while. And so we go over and we look at what takes place on the hourly, and we essentially form a zero line. Just under the zero line, we get another pinch right there with a little narrow range bar. To me, that's confirming taking out the low of these would be a trigger, essentially taking out the low of this area, right? So you're in on this trade. Now, I don't want to talk too much about the merits of whether this is a good trade or not, but if this is one of your 11 symbols that you're watching, it's not a bad idea to take a trade like a two time frame pinch play where we've got some narrow range developing on the hourly, on the lower time frame, with the MACD corresponding below the zero line here, right? Both of these were a low ADX condition. It wasn't like there was any strength in either direction. And when I play swing trades, I'm probably focusing a little bit more on the MACD, looking at maybe DI a little bit, but I'm not necessarily too consumed with the ADX lines in a lot of cases because I know I'm only going to be in there for a few days. It's not a trend trade. When we're trend trading, we want to focus a lot on ADX and really let that and lean on ADX to determine which symbols to play. But when you're swing trading and you only have 11 symbols that you're looking at, for example, then you can be a little bit more liberal with the signals with relation to the ADX line itself. All right. So look at the way this played out. We get a monster red bar on our trigger bar, right? Now, that's coming out of this big consolidation. So we get a big monster red bar. What does that mean? Is that the end of a move? Should we be taking profits, or is that the start of a move? I read that as the start. It's an ignition bar. It's a start of a decline, not the end of one. Same thing with this big red bar. This is a monster red bar that essentially tells us we're breaking down. All right, so I'm not necessarily looking to take action right now. All right, then look at what follows. We get a hesitation bar, kind of like a little doji forms, and we can see that's all we're doing is working our way back on the 18. It is highly, highly useful to have these two time frames up at the same time when you're swing trading. All right, you want to see what's going on here. If we get a doji bar here and we get a monster tail or something like that on an hourly, then it might give you a different feeling. If you start to see divergences showing up on this time frame, might give you a slightly different feeling. But right now we're feeling pretty good. Then we get so out of the pause bar, we get another move to the downside that's really strong. Well, now we're getting a little stretched away. I mean, we've made a pretty big move and we've got two big bars, and look at how far away we are from the 18. So what you might consider is taking partial profits here. That's a big monster bar that you're having. That's two of the last three were monsters. So we get expansion in our favor. Well, I'm looking to take partial profits at this point. I might not take the whole thing. There wasn't any gap. It wasn't a monster big bar. It wasn't all the way down to this low. If this bar would have been big enough to take us all the way down to that low, I might have considered just saying, you know what, just take the whole thing. But you take at least something here. And then what you do is you're looking for signs. And what I would do at this point, and if you notice, the MACD held the signal line throughout the whole move, but we can use the red DI in this case, and we want to keep looking for signs. So this bar gets going. We're looking for signs for this to make a divergence. Like I say, when we go through a pullback towards the 18, I would almost look at this as a reset. Remember, we took profits at this level down just under 200. So we're talking right about here. We've already taken some profits, and we're now looking for the first sign of divergence in the red DI. And that would have actually taken you all the way down to the low. If you see that, you see how this was basically confirming every move until this point right here. All right. Now, I mean, this ends up being sort of like a perfect example. But what I'm trying to tell you is that if you don't necessarily want to use the red DI in this circumstance like we do if you're doing it on a longer term trade or something like that, because it's going to be too late. You see the divergence shows up way too late, or this change in shift in the sellers shows up way too late. You have to go down a time frame, and that's how I would go about doing that in this situation. So there's other ways you can look at this. If we take a profit here, and then when you get another bar and you're right around this prior low and you want to take a little bit more off, you could do that. So let's say you take half at this level, you maybe take a quarter here. So half of what's left would be a quarter, right? And then you get a gap down the following day. And that's this gap right here. You could be down on your hourly. You could even go down to a 10-minute chart and look for the first sign of a reversal or taking out a prior bar's high or something like that, which would have taken you out here. Or you could just exit on the gap down if it's a big enough gap down, right? If you get a decent sized gap down, you can go ahead and just exit at that point. If you're enjoying the content, hit that like button and also subscribe. So we're looking to exit on expansion in our favor. We don't necessarily want to trail a stop and get stopped out when you're swing trading. The numbers suggest that you can trail wider stop to get you to a target, but don't trail to get stopped out. All right. Use that strategy in your favor. All right. Let me show you another quick example of a long trade. Now this goes back. Let me just point out where this is. So we get a move up and we start to consolidate. Now, sometimes you get that perfect pullback, 3 to 5 bar pullback, and other times you get this sort of sideways consolidation. But look at what happened. We formed a, first of all, let's look at the moving averages. See these rising moving averages? I mean, beautiful parallel look to them, very strong trend. And we get a move down. And if you notice, we actually formed two lower highs, but this is your narrow range bar. This was an inside bar, and then we get a narrow range bar that's an inside bar. So we get back-to-back inside bars, and this one is your narrow range. All right, so this is right out of my second course. This is a great example of a compression-based swing trade. All right, we get a narrow range here, and look at what this is doing. This is reverse divergence. You see how this is making a higher low while this is making a lower low? I think a lot of people can be fooled by this signal. It looks like it's rolling over. It's not. When this is rising, all right, and we're making higher lows, and this makes a lower low, we're actually looking for this to be almost like a slingshot back up to a new high. All right. So look at how strong the momentum was, right? And then we get a low ADX breakout on this time frame, which triggers things into the upside. All right. Now, again, we get a big green bar to follow. I think personally that is an ignition bar. But look at what happens the next day. We get a pretty substantial gap. I don't have any problem taking half off, even 2/3 off, if you're going to make that much money in such a short period of time. Remember, you're in down here, and we're talking about exiting way up here. I mean, that's a great trade. If you're risking the narrow range bar and you're up in here, you're making 2 or 3 times what you're trying to make. Now, again, I give rules as to how I would exit those trades. This is for the people that want to look at and try and exit at the time they think that it's a good time to do it. In other words, they're not necessarily exiting automatically based on how much it moves. They're looking at it saying, I'm looking for signs of momentum loss or whatever. Now, if you go and look at what took place here, you could take partial profits, and then on this gap up bar here, that was the first time the green DI did not confirm the move to the upside. Do you see what I'm saying? We made confirmation all the way up, we get a pullback, and then we gap up here, and green DI is failing miserably. We're going to put a stop down below the low of that bar. It ends up being a failure bar. You're essentially exiting right at the peak of that move. All right. So those are 2 strategies using the smaller time frame DI, all right, to help you exit these moves that are based off the daily, essentially, right? We're looking at this daily, sort of a swing trade off the daily. We're using the hourly to help us with the entry and the exit. If you notice, in between, I'm not necessarily overly consumed with what's going on the hourly. I'm looking at the bars on the daily, And if I get a big gap up, if I get a big expansion bar or something like that, then I'm going back down to this time frame and I'm looking for an exit point using I think the higher DI. If it's to the downside, it'll be red DI. If it's to the upside, it's green DI. This is a great, I think, approach that allows you the ability to do two things, right? It allows you to capture quick profits with your first target. The incremental sale, right? We're taking partial profits in a trade so that you can go to a break even, you can get yourself some profits on the trade, and then see if you can't get a little bit more out of it once and look for signs of a reversal using the smaller time frame at that point. If you do that on both of these types of trades, these shorts and longs, and you do these on these XLs, I think you're going to find the trades are probably going to take place anywhere from 2 to 5 days on average. All right. Most of the time, you will miss some, you're going to have some situations where you get a little pullback and then it'll go again. But if you're not trend trading, you shouldn't be worried about that. You're looking to capture short-term gains, move in, move out, book your gains and move on. All right. So, hopefully this helps. Let me know if you have any questions. Thanks.